Hello, welcome to Maximize Your Business Tax Return. This webinar applies to tax year 2022, and we are going to cover in this webinar who must file business owner deductions, gathering your income, gathering your expenses, tax day, documents that you need during your tax appointment, and red flags to watch out for. At the very end, we're going to offer Q&A. Maybe you have specific questions on tax strategies for your business. We're going to reserve the end of the webinar for your questions, but please do not hesitate as I am presenting between the slides to ask any questions. I want to make sure it's my goal to ensure and to make sure that you understand each slide before I get to the next. So I don't mind stopping and answering any questions that you may have during the presentation slide. Okay, so let's begin. So here are some important tax deadlines to be mindful for tax year 2022. The deadline to file your taxes for individuals, sole proprietors, LLCs, C corporations is next year, April 18th, which is on a Monday. If you are a partnership or a S corporation, your deadline to file is actually March 17th, 2023, which is on a Wednesday. If you need additional time to file your taxes, maybe you are waiting on a particular tax document, you can file an extension. And if you do so, the deadline to file that tax return is October 17th, 2023, which is on a Wednesday. I do want to make mention that even if you do file an extension, if you do owe a balance for tax year 2022, you will accrue a 5% interest every month until that balance is paid off. All balances, even if you did complete or file an extension, must be paid by April 18th, 2023, no matter what, okay? So I just want you to be mindful of that. Even if you did file that extension, the IRS will go back date to April 18th of the tax deadline and calculate that 5% on top of that tax balance. So for example, you owe $500 and you pay the balance in September or doing your extension file in October, the IRS will go back to April 18th and charge 5% on that $500 per month up until the date that you actually pay that tax debt. So if you pay this debt the following year, like in 2024, then the IRS is going to, the same rules apply. They're going to charge that monthly interest up until the date that you pay that balance, okay? All righty, let's go into the next slide. Who must file? So if you've made any income in your business, you must file a tax return. Most businesses will receive Form 1099-K. If you are not familiar with this tax document, if you take payments in your business, maybe you take card payments through PayPal, Square, Venmo, Cash App, or anything like that, these are considered third-party merchants. And every time that you receive income through these merchants, and especially if it exceeds the $600 threshold, they will produce a 1099-K, and that document is reported, okay? So if you expect a 1099-K, you should file your taxes. If you did not bring any income in your business, maybe you are a new startup and you didn't bring in any money for your business, but you do have expenses, I would highly encourage you that you still file your tax return because even if you did not make any money, you still have expenses that you can still file. And of course, that's going to produce a loss, which will be great for you if you are profitable in 2023, because you will be able to apply that loss for tax year 2022 to your 2023 next year tax file. So when you file your taxes for 2023, in 2024, you will be able to apply that loss for tax year 2022 to that year, which will help you save taxes, okay, if you are profitable for 2023, okay? So hopefully I didn't confuse you on that. So in short, file taxes if you receive income, file taxes if you did not receive income and you just have expenses to claim. It's a good idea that you do. Here are the 4 business deductions that most businesses qualify for. When you visit a tax office or your tax professional or even your accountant, they will automatically apply these deductions to your tax return. But I would actually highly encourage you to make mention of these to see if this is an option for your business type, okay? The qualified business deduction, if you are not familiar with this deduction, is actually applied to profitable businesses. So if you made a profit and you do not have a loss for tax year 2022, if you, for example, owe $10,000, this qualified business deduction will allow you to save up to 20% or more. It pretty much gives you a deduction in taxes that you can possibly owe. So if you were profitable in tax year 2022, make sure that this qualified deduction is present on your tax return. The good thing about this deduction is that the IRS automatically applies this to your tax return. If you are profitable, you'll typically see this deduction on the first page. So if you are a LLC, it'll be present on the first page of that 1040 form, or if you are a corporation, it will be present on the 1120 corporation tax form, okay? So make sure if you are profitable for tax year 2022 that you see this qualified business deduction, because it can essentially save you an additional 20% or more in taxes or what you may owe Uncle Sam, okay? The next popular deduction that you may qualify for is the home office deduction. Now, if you are a home-based business, then you will automatically apply for this deduction. Now, what you will need to present or provide to your tax professional or even to your accountant, you will need to provide them the total square footage of your home, in addition to the square foot of the operating space or the space that you conduct business, whether that be your kitchen, out of your kitchen, or you have an additional room that you conduct your business out of. You want to make sure that you have available the square footage of that, okay? You are able to claim under the home office deduction your rents. If you don't own a home, you can claim your monthly rents, or if you do have a mortgage, your mortgage also qualifies as rent. Your utilities include your lights, your internet, your phone. Anything that's needed to power your business is considered a utility, and you can claim this under the home office deduction. Repairs and maintenance, especially if you are home-based, maybe you had to make your space comfortable so that you can conduct business. If you have a room out of your home, maybe you had to repair the wall or paint the wall, buy a computer desk or chair, anything that you needed to run your business out of your home, you can actually claim that on your tax return. Taxes only applies if you own your home, which is also called the real estate taxes. You're able to claim this under the home office deduction as well, okay? The next business owner deduction is Section 179. If you're not familiar with this, this is a depreciation. So if you bought a business vehicle, you're able to depreciate this for tax year 2022 at 100%. So if you bought maybe a G-Wagon or a Range Rover and it cost $100K or more, or whatever that vehicle costs, you're actually able to 100% deduct that in tax year 2022. But unfortunately, that 100% deduction goes away in 2023, but it's still available. It just drops down to 80%. So that's what the Section 179 deduction is a depreciation deduction if you bought a business vehicle, or maybe you have equipment or some type of machinery in your business that's needed to operate, you're able to also depreciate that at 100% as well. Or you can do the useful life, which is up to 5 years, and depreciate that as well. Accounting software, software. I was giving you an example of the type of software that I use, which is an accounting software. I'm actually able to depreciate that. So if you have some type of software in your business to conduct or run your business, you're able to also depreciate that, okay? And last but not least is the S Corp taxation, okay? If you are not familiar with this, if you are an LLC, when you file your taxes and you are profitable, most people, most small businesses are unaware that you are being double taxed at the self-employed level. Now, a lot of LLCs and a lot of corporations take advantage of the S Corp taxation because they are able to avoid that double taxation, okay? I also do want to make mention that this S Corp taxation is just not limited to corporations. You can actually still remain a LLC and qualify for the S Corp taxation by completing Form 2553 and faxing it or mailing it off to the Internal Revenue Service. If you do want to take advantage of this special taxation and you want to remain an LLC, or even if you are a corporation, you want to make sure that you get this document completed as soon as possible, hopefully by year end, and get this faxed off. The typical processing time, if you fax it, which is the fastest way, typically takes up to 30 days. But lately I've been completing this document for my clients and they've been getting their S Corp acceptance letter within 2 weeks. Okay. So just make sure if you are profitable, I wouldn't suggest that you apply for this taxation if you suspect a loss for tax year 2022. The S Corp taxation is pretty much good for profitable businesses. So if you suspect a loss, then you can actually wait until next year to complete this, okay? All right, so we've covered all 4 business deductions that most businesses qualify for. Let's move on to the next section. Tax tips. When you file your taxes, you want to make sure that you bring in your prior year tax return. The reason why is because if you had a loss in 2021, 2020, or any previous years, those tax returns will present a document, better yet known as the carry forward or carry back. Another term that you may also see in your tax documents is called a net operating loss, okay? And the reason why this document is important is because if you have a profit in tax year 2022, you are actually able to apply whatever is in excess to your current year tax return and apply that to your balance, okay? That net operating loss or that carry forward can potentially, if you're not over certain income thresholds, help you save additional taxes on your 2022 tax return, okay? If there's any questions on this section, I know this is probably a little confusing, especially for new startups. If you haven't heard of carry forwards, you can definitely stop me now and ask any questions. Okay, so on the Internal Revenue site, they actually have this information stated that you can discard your tax returns after 3 years. I also do want to point out too that this is available on their website, but if they suspect that you filed a fraudulent or suspicious 2022 tax return, the Internal Revenue Service do not consider any statutes of limitations. They can go back as far as 10 years, especially if they suspect some type of underreporting or some type of errors in your filing on your 2020 tax year. They can also open up an investigation for your 2021, 2020, and 2019. They can go as far as they like, okay? So I know this is kind of like, why did you tell me to keep it for 3 years? This is available on their on their website. but I'm simply stating that you want to make sure that you are filing accurate tax returns, because if it does raise suspicion to the Internal Revenue Service, they can go beyond 3 years and audit any previously filed tax return. All right, so before we even get into the next section, which is gathering your income documents, before you even gather your income in your business, before you even gather your expenses, it behooves you to have some type of accounting system in place. Okay, because you can gather all of these documents, but you need to apply all of your income, all of your expenses for that year onto some type of financial document to provide that to your accountant. Okay. During your tax appointment is not the time for you to request your accountant to add up receipts or balance your accounting. You should already have this available and ready during your tax filing appointment. If not, you want to make sure that you book some type of appointment with your tax professional or with your accountant to help you balance your books or compile all of your income and your expenses prior to your tax filing appointment. Now, popular systems that I will recommend that you use is QuickBooks, only because it will bring in all of your income that you've made for the year, as well as all of your expenses. All of this will be all in one place if you use QuickBooks. Another system that you can use is Excel, which is acceptable by the Internal Revenue Service. You can use any Excel format P&L document to include all of your income and your expenses, or it can be manual. Now, I wouldn't suggest that you go manual, which is you writing down your expenses and income on a sheet of paper. You can sign and date that. Even this will also make you compliant. I will actually encourage you, instead of writing down your income and your expenses on a sheet of paper, to visit my website at fieldsaccountingfirm.com, and under the appointment section, you'll be able to download my business tax checklist for free. You don't have to provide your name or email or anything like that. Within that tax checklist, the last 2 pages, we actually created a P&L document for you that includes the income section and all of the expenses that you can apply to your business. Okay. So if you don't have QuickBooks or you don't have some type of Excel format, visit our website and download our business tax checklist for free. All righty, we're going to jump into gathering your income tax documents. Now, before I list all of the income that you'll need to include during your tax filing appointment, I would highly suggest that you log into your IRS account and download your income tax transcript. Okay. And the reason why you do this is because you'll be able to see what vendors, what companies reported income to the Internal Revenue Service. This will help you in your income document gathering process. Okay. So download your tax checklist, because this will also help you in preventing receiving letters from the Internal Revenue Service for underreporting income. Okay. Now, popular income documents is, W-2 if you pay yourself in your business through some type of payroll system. 1099K, like I mentioned before, is a third-party document. If you take payments and you use some type of third-party merchant company, such as Venmo, Zelle, Square, they will actually produce a 1099K for your business, and you can actually retrieve this tax document by logging into your account. And under your account, they should have some type of tax section, and you'll be able to download your current year 1099K. The 1099 NEC is if you receive income from, help from another business. If they've paid you more than $600, they are legally required to report that income to the Internal Revenue Service. Okay. A 1099 dividend is typically received under a corporation. If you paid a shareholder or anybody in the business owner, any type of dividends, this document will be available for you. 1099 miscellaneous is just another 1099 that typically includes like rental income or royalty income, okay? All of that will be included under 1099 miscellaneous. Capital gains, maybe you are involved in the stock market under your business name. You want to make sure that you gather all of your capital gains documents, better yet known as the 1099-B. You'll be able to log into your broker account and download your current year tax document, okay? Affiliate income, maybe you promote a particular software. For example, I promote QuickBooks. I highly encourage small businesses to take advantage of QuickBooks. I receive affiliate income by signing up clients. I also use Gusto, which is my payroll company, and I also sign up clients under Gusto, so I receive affiliate income. They will actually produce a 1099-K at the end of the year that I would need to include on my business tax return. Interest income is typically received through banks. Maybe you keep a particular balance that produces interest income every month through your bank. They will actually produce a 1099 interest document to you at the end of the year. You want to make sure that you include this on your tax return. Like I mentioned before, when you go log into your IRS account and download your income account transcript, you'll be able to see all of the income that has been reported to the Internal Revenue Service. So it will include all of the 1099s, any W-2s, interest income, capital gains, you name it. Everything that has been reported income-wise under your business name has already been reported to the IRS. So download your tax transcript and use this as a aid in gathering all of your income tax documents. The next section is gathering your business expenses. Now, all of these expenses that I have listed here is pretty typical for all the businesses. I do want to make mention to avoid receiving any letters or even possibly getting audited under your business. You want to make sure that your expenses is specific to your industry type, okay? Make sure that your expenses is specific to your industry type. And what I mean by this is, for example, I am a full service accounting firm. My expenses will look drastically different from that of a hair salon, okay? Hair salon has expenses such as booth rent, beauty products, and all of that good stuff. It is actually considered unreasonable for my type business, an accounting firm, to have beauty products present on my tax return. So you just want to make sure that your expenses in your business is specific to your industry. But if you have paid money to conduct business or you have expenses, anything that you spend in your business is deductible. You just want to make sure that what you are claiming on your tax return is specific to your industry, because all of this information is being reported to federal and state, okay? So I have listed here equipment, mileage, your car expenses, your salaries, your rents, home office deduction, any estimated taxes that you've paid to federal and state, your insurance that you have to have a particular type of insurance in your business to avoid lawsuits. For example, I have to carry errors and omissions insurance, also workers' compensation. Since I have employees, I have to obtain certain insurances in my business, okay? Employment taxes, maybe you pay yourself as an employee, but you pay payroll taxes under your company. You want to make sure that you file that as an expense on your business tax return. The sales and use taxes is if you have some type of business or e-commerce where you have to ship products to clients and you have to charge state taxes. You want to make sure that you include that as an expense on your tax return, only because monthly, if you do take sales and use tax in your business, that is actually to be remitted to your state at the end of every single month, okay? Depreciation, like I mentioned, under the business deductions, you are able to depreciate your business vehicle, equipment, computers, machinery under your business, and that's considered a expense. Okay, so all of these expenses that I have listed here is pretty standard for all businesses. But there may be different expenses that may be present on your tax return. Okay. I want to mention this again. Just make sure that your expenses is specific to your business type. So we've covered gathering your income. We've covered gathering all of your expenses. Now, once you've done all that, you should be able to apply that to some type of accounting system, whether that be an online accounting system like QuickBooks, which will automatically account for your income and all of your expenses. Or if you use Excel, you should be able to provide your Excel file to your accountant, and they will be able to file your tax return. Okay. You want to also include any bank statements or receipts. Okay. But if you have some type of online accounting system like QuickBooks, in my firm, receipts are not necessary. Only if you made a purchase for the business under your in your personal bank accounts. This is pretty typical for especially new startups. I've done this. I've been in business since 2016, and I didn't have my business credit card or debit card available when I had to make a purchase. I believe I had to buy some copy paper. So I needed to apply that expense from my personal to my business side. So this will be probably the only time where you'll need to have receipts, but definitely keep all of your receipts in your business, especially for your major purchases, because in the event of an audit, you want to still be able to prove those expenses. Now, QuickBooks will not relieve you from any audits. QuickBooks does record all of your income and your expenses, but in the event of an audit, the IRS want to see receipts because they want to get the specifics of that expense. Okay. Merchant sales reports is better yet known as that 1099-K. You'll be able to log into Cash App or Venmo, PayPal to produce your reports or even that 1099-K. Now, the only third-party merchant that does not report to the IRS is Zelle, okay? So this is where your accounting will have to take place. If you have QuickBooks, that's already been reported for you already. But if you need, if you have a manual accounting system and you do take Zelle payments, then you will have to rely on your bank statements, okay, to account for all of this income if you do not have an online accounting system. Make sure you bring in your prior year tax returns to take advantage of any possible carry forwards or net operating losses. Okay. The P&L statement, the balance sheet, statement of cash flows, and income statements is typically available to you if you have some type of online accounting system like QuickBooks, FreshBooks. I think that's pretty much, I can't think of another, but QuickBooks is definitely the most popular, and FreshBooks is also coming to mind. Those online accounting systems will produce these four financial documents for you, okay? All righty. And also, too, if you don't have an Excel document available or you don't use QuickBooks, be sure to visit my website at fieldsaccountingfirm.com. And under the appointment tab, you'll be able to download the business tax checklist. Okay. And it's free. You don't have to provide any information. The last 2 pages is actually a P&L statement that we have created to assist you in gathering your income and your expenses. Now let's cover red flags. Now these are red flags that the IRS look out for. And so I just wanted to bring these to your attention because my goal is so that your business does not receive any letters for underreporting income, or I just want to make sure that you are aware of what they actually look out for. Now, I do want to also make mention that no accounting professional can guarantee if your business will be audited or not. You can be doing everything right and your business may get audited. You just want to make sure that you have really good accounting records and you're able to produce income and receipts, okay? Because you still will have to be compliant and provide and substantiate any expense that you have in your business. Okay. So red flag number one is losses, especially back-to-back losses. Okay. The IRS at some point may wonder, why is this business still operating and they're having a loss every single year? Okay. Now, losses is not the end of the world. It's totally normal, okay, for your business to have a loss. I'm simply stating that at some point the IRS will raise suspicion and they may send some type of letter or produce an audit for you to provide or substantiate your expenses in your business, okay? Number two is unreasonable expenses. Like I mentioned before, under the gathering expenses document in your business, you want to make sure that you are not claiming unreasonable or unusual expenses in your business, and even expenses that are too high for your industry type can also be a red flag to the Internal Revenue Service. So if your expenses are legitimate and you can prove your expenses through receipts, you are good to go. I'm simply stating that unreasonable or expenses that are too high is a red flag and may produce some type of letter or an audit. Okay, so just be mindful of that. Number three is omissions. When you omit income, okay, this automatically will produce a letter. I won't say it will produce an audit all the time, but it will produce a underreporting income letter. So you want to make sure that you are not omitting any income in your business. Like I provided in the previous slides before, you want to make sure that you download your income tax transcript from your IRS account, and that way you'll be able to see all of the income that has been reported to the Internal Revenue Service, okay? So when you do that, you'll be able to file all of the income. You'll be able to see who reported income to the Internal Revenue Service and avoid omitting any income. Number four is large refunds. So refunds that is due to big losses, okay? You just want to be mindful of your losses in your business. Like I mentioned before, if they are legitimate and you can improve that expense, you are good to go. I have this here because this is a red flag, large refunds and big losses in your business. But if you can prove that, you're good to go. Number five is amendments. It actually behooves you the first time around to make sure that your original tax filing is as accurate as possible. Now, amendments is not illegal or anything. I mean, you could have possibly accidentally forgot to claim income or a particular major expense, and it requires you to amend your tax return. That's totally normal. I'm simply stating that an amendment that causes your tax debt to decrease significantly may result in a letter or an audit, okay? So I would strongly encourage that you take your time during your document gathering process to ensure that you include everything possible on your tax return. But like I mentioned before, amendments are totally normal, and it could be possible for you if you have accidentally omitted income or a major expense. Okay, so these are the top 5 red flags that I commonly see when a business owner receives some type of letter or when they are audited. Okay. All righty, so that is the end of the webinar, and I hope that I explained everything to you as thoroughly as possible. If you are looking for a new accountant, we are accepting clients, and you will be able to just visit our website. On that homepage, on the bottom right, you'll see a client intake form, and we will call you just to understand what type of accounting services that you need in your business, or maybe you just need an accountant on the personal side. We actually service individuals, families, small businesses, nonprofits, truckers, and corporations. Okay, so we service the whole community. So if you're looking for a new accountant, please visit our website and complete our new client intake form, and we will call you to understand what type of accounting needs that you have, okay? Thank you for joining this webinar. If there are no questions, we're going to end here. Okay, that's great. That makes me feel good knowing that I have thoroughly explained everything. As an accounting professional, no questions is not necessarily bad for me, because it makes me feel as though I've explained everything as clearly as possible. But I definitely love questions, though. All righty. So if there is no questions here, we are going to end this webinar. Please be sure to recommend this webinar to any friends or families or business colleagues. We will actually be hosting several webinars up until January of 15th, which is when the upcoming tax season window opens. I want to make sure that you all are gathering all of your tax documents properly to guarantee a successful tax file. Okay? All righty. Enjoy the rest of your day, and until next time.